Ladies and gentlemen, Kay Kim here. Welcome to the Daily Update. Hope you guys had a good day trading today. Market is down about 1% there on the S&P. Nasdaq is down about 1% as well. Semi's down 0.5. Dow, Russell, Banks, Energy, they're all down quite a bit there. Especially Energy did get hit harder today. Transport's down about 1.2%. Biotech is green today. Emerging market also did see some movement to the upside. Grayscale Bitcoin continues to see weakness there with a negative 3% today. Gold, silver, miners holding up really well today, right? While the equities are tumbling, right? You can see that oil is down about 1.2%. Dollar is, down about, half a percentage. Treasury bonds down a little bit. VIX did see a little bit of pop there, 8%. Let's stick with the spider 65-minute chart here. So I think, just following up from what we talked about on the last night's update, and I think the key, a phrase that I was mentioning and continuously, on the last night's analysis is the follow-through. The follow-through. We need the follow-through, right? So this is where we closed yesterday. And then this is where we opened up today. Some fluctuations on the first hour, but I think we really held up really well throughout the entire day for about 4 hours or so. Instead of seeing that bullish candle towards maybe last couple hours, right? Something like this, right on the micro-term pivot. Instead, we lost it. The micro-term pivot there. We came down to the short-term moving average. And we lost that support also, and then we came back down to this level. Keep in mind, there was a gap area here, right? I removed that just because that gap was filled. You guys remember? There's a little island gap that was opened up. That level got filled today. And I think the buyers should be grateful at this point that the bears left some of this gap open. Why is this important? We can go back and check real quick what happens when the gap doesn't get fully filled here. I think the good example of that is going back to, I think this one right here. I think this is a good example here, looking at March 8th gap here. Do you see there was a gap here? I can actually make it more interesting so you can see that there was a gap. Do we agree that there was this gap here, right? However, what happened was when the price came back down, you see that lower wick here, right on the midterm moving average. You see how that gap wasn't fully filled. Only the 50% of that gap got filled. This is what I mean when I say there's a cushion. Every time when there's a gap is open, it's going to provide cushion should the price decline. So in this case, bears brought it down, not able to fill the entirety of that gap, and you saw that how quickly we saw that bounce here. And another example might be something similar here, right? And this one, obviously wasn't able to fill the entire, not even any of it. This thing came down, just retested it, and then quickly brought up. So leaving some of that gap is going to make things vulnerable for the bears. Unless bears got ultimate plan. What is that ultimate plan for the bears? Well, ultimate plan for the bears is that they left a little bit of this gap because they want to gap it down and turn this into an island top, right? That will be the best case scenario for the bears, for the sellers. Turn this to an island top. That's about 0.5% gap down. If we see some like that, that's going to turn into island top reversal, and things will get hectic for the buyers if we do see some like that. However, it's a little bit dangerous for the bears to play that kind of gamble at this point, just because we're kind of dealing with these higher lows and higher highs, and this is the vicinity of potential higher lows. So what buyers can do, absorb that little bit of volatility today with this gap being filled. We don't see any kind of wick though, right? We don't see any kind of lower wick at this point. So it closed the day pretty weak. It sounds like a lot of people chased it up. It looks like a lot of people chased it up here, right? And then they're putting their stop just, you know, underneath this gap area, or even some people buying it over here, putting their tight stop underneath this micro term support, getting stopped out here and just panicking last couple hours. That's what it kind of looks like. Because you can see how, you know, how you can kind of see it in these candles. That's why I love analyzing the candles, because it looks like it was hanging around and it was pretty quiet there all throughout the day. And then out of nowhere, boom, boom, like people are placing tight stops, gotten stopped out. Some people place their stop just underneath the gap area, underneath that wick, and they're getting stopped out. And market close, and this is obviously the prior resistance level, right? So that's where we landed and closed the day. So what the buyers need to do, obviously, they want to keep this gap open and see a quick reversal here. If we do see something like that, there's a good chance buyers want to kind of, you know, this was maybe quick trap, right? In the micro term, get those people out before this thing gets up to fill this gap. Do you guys remember on Monday, it would have been better for the buyers to fill this gap right here, right? Leaving some that's a little bit vulnerable unless they can gap it up. Well, you can see already this week here, once this gap wasn't fully filled and things got a little bit hectic here for the buyers, right? Same logic applies for the bears. If you leave this gap right here, it's going to be hectic for you, the bears and sellers, where buyers can bring it back up. So obviously buyers want to reclaim the short-term moving and really got to get up here and fill this gap. And things starting to get a little bit hectic last couple of days because of this gap wasn't fully filled. It would have been better if that gap was fully filled. So, you know, again, in the short term, let's give benefit of the doubt to the buyers. Because we are still in the vicinity of a higher low, right? That's a higher high, that's a low, higher low. We're in the vicinity. We don't know if that's going to be higher low yet. As of today, we are staying in the vicinity of higher low. In the micro term, however, we do have a lower highs and lower lows. So in the micro term, we're bearish. In the short term, we're bullish, right? So it's going to go down how the market is going to behave tomorrow and remainder of this week. Let's check out that oscillator and see if we can extract any more information from this analysis here. So you can see, and again, this is what I said on last night's update before I ended the video, that we need to see a follow through, right? Because we do have a little bit of a selling pressure in the micro. Remember we talked about that? We, instead of seeing a follow through to the upside, we continue to the downside, and with that, oscillator continues to decline to the downside. And keep in mind, oscillator is not oversold at all, meaning bears still got energy to push it down if they want to, right? They really want to do it, they can. They're not tired at all. So all it's gonna come down to is how this market is gonna behave in this 411, 410 area. It's gonna be extremely important how this market is gonna open tomorrow morning and how it behave in the first couple hours or so. I'll tweak things out. We'll go from there. We'll re-examine the situation tomorrow night. Enjoy your evening and good luck trading tomorrow.